We welcome you to our latest Georgia Zone webinar here on the Georgia Zone Credit Union Facebook page. I'm Adam Schick, and today we are going to be talking about home lending and mortgages. It continues to be a very hot topic. It's obviously a rapidly changing topic as well, which is why we wanted to have another one of these sessions to help make sure that you guys have all the information you need to make the best decisions about your homes. And to do that, we are joined by Catherine Curring from Georgia Zone Credit Union. Catherine brings a wealth of knowledge and experience. She has been in the lending business for 30 years. 20 years she's been a mortgage originator, and the last 8 years she's been doing that with Georgia's Own. So Catherine, thank you so much for joining us today. How are you?
Absolutely fine. Good, thank you.
So I put a lot of information out there about your past and your long history in this business. What is it that's kept you in this for so long? Why are you passionate about the work that you do?
You know, I've asked myself that a lot in the ebbs and flows of our industry, when it's been super strong and, you know, when we've had some challenges. But, you know, at the end of the day, it's the element of human interest that keeps me, you know, so drawn to the industry. I say it to this day. Every time I pick up the phone, I learn something new. It's about someone, what they do, where they live. It's just that human interest element that keeps me here.
And we hope to have the human interest element from all of you that are out there watching. And again, this is an interactive session. If you're with us live and you have questions, and we're going to get to a lot of questions, but it's possible you have something that's more specific to you, or it's maybe something we didn't quite address, you know, to the degree that you feel like you needed the specificity. So that's why we have this Facebook page, and we have the opportunity to get your questions in. And Maren Krauscher from the Georgia Zone team is going to be taking those questions and sharing them with us. So if you do have anything that comes up, please put it in the comment section below, and we will get to those questions during this live session. If you're watching this on the archive version, you're not with us live, you can still put those questions in the comment section, and someone from the Georgia Zone social team will get back to you and make sure you have the help that you need. So, Catherine, let's go ahead and get rolling with the official business here, the questions that people want the answers to. And let's start with the most basic one. We're talking about home lending. If I am considering buying a home, what is the first thing I should do? What steps do I need to take right from the jump?
Well, celebrate yourself, congratulate yourself. That is a big decision. It's a big event in anyone's life to pursue home ownership. I understand this is National Home Ownership Month. Didn't know that was a thing until recently. I think it should be every day, as a matter of fact. You know, whether it's with you all alone by yourself or with a borrower, co-borrower, you want to establish your capacity for the housing expense. Connecting with a licensed mortgage originator will ultimately help determine the purchase price, the loan amount, the loan product to support your funding goals. If you wish to proceed in advance of having that conversation, there are endless tools online, including mortgage loan calculators on Georgia's Own webpage or on the industry pages that you'll find. I'm part of the Georgia's Own Credit Union team that's available to receive your call and or email directly, so that we can talk about your specific circumstances and funding goals.
You know, a lot of people, I think, and this is how my wife and I started. We've been in our townhouse for about 1.5 years. It's really easy to get caught up in, you know, in Zillow window shopping, right? You start clicking around, and it can be really fun. Like, oh, look at that, and you're looking at prices, and then you see something you like. But one of the things that we didn't realize at first, and I had to learn this by going through it, is you can't just see something you like and then say, oh yeah, I want that. Let's go look at it, because they're going to require, they want to know, are you pre-approved? Are you pre-qualified? Can you talk about those steps and how important those are before you get to the point of, you know, actually going and looking at places to potentially be in a position to make offers?
In virtually any visit that you want to arrange to see a property, you'll require access with a licensed realtor. And realtors will want to know, first off, how you'll be funding your purchase before they spend time with you and help advocate for your purchase experience. Even if you were paying cash, they often want verification that you have funds in the account that's going to be utilized. Otherwise, if you're using a loan, which is the most common means of purchasing a property, they'll want to know the nature of the loan that you're using, whether it's a conventional, a government-backed loan like FHA or VA or otherwise, because that also tells the seller how the property is going to be qualified. So they'll want to present, what their means are for funding. And now that we're in a market with multi-offer situations, the sellers will actually rank the offers, usually on the most or the low risk offer first, like a cash offer, and know from there conventional or government backed, depending upon how the property has to qualify as well. So getting your funding in place is like your ticket to go shopping, is what it is.
Mm-hmm. Yeah. And it's the kind of thing too, where, I think from going through it, you're in your head, you're like, well, I know that I can afford this house. But that's not how it works, right? Because you're going to people that don't know you, and they don't have that trust of you or know what your means are. So it's almost, I guess it's almost like, you're verify, it's confirm but verify, right? And it's your way to show a potential seller that you are, you're making a serious offer and it is worth their time and their interest, as opposed to, you could be anybody. And that's why the pre-approval, the pre-qualification, that is basically your way of verifying what you can do for people that don't know you.
Yeah, that letter of loan eligibility, often called, pre-qualification or pre-approval. You're presenting to the seller that you've taken the time to be validated, your income, your assets, your credit. You've taken the time and the due diligence to become qualified for funding, and you're making an offer so that they can prepare to remove their house from the market while you get through the funding process. Ultimately, at the end of the day, it takes a borrower and a property to make a mortgage fundable. So to establish the qualifications of the borrower, we want to look at things like their creditworthiness, the continuity of their income, knowing that income is going to be sustainable going into the mortgage and potentially throughout the term, that they have their assets in place, not only for the down payment and the funds to close, but a couple months mortgage payments in a reserve account is often required. For the property, once the borrower is under contract and they've secured a property, we go through qualifying that property. And part of our job is to manage those third parties to get those items in place, like a title commitment, a title search in the property to get the tax history and the ownership to make sure it's cleared of any liens. Flood map from the FEMA website, the appraisal, of course, to qualify the market value of the home. And then on the insurance for the property, to get that secured binding coverage on the property to protect the collateral with a provider that the borrower wants to use.
Again, we are taking your questions as well as the ones I'm asking Catherine today, so be sure to share them in the comments. Again, if you're watching live, you can do that right now and we'll talk to Catherine about it. Or if you're watching this later, we can certainly make sure your questions get answered if you put them in the comment section below. Catherine, we talked about this a little bit just now, but I'm curious just for people who are ready to take that step and they say, okay, I know I'm in a position where I want to buy a home, I need a mortgage. What do they need to have put together when they reach out to you and the team, if they're using Georgia Zone? What are the most important things you're going to look for right at the start to kind of begin this whole process?
Most people want to tell their story first. So I'll always offer to answer their pressing questions and find out more about their personal circumstances and their funding goals. But if they readily have the information available to help us back into a loan model by phone, just by a verbal communication, I'd want to know what their source of income is. Are they full-time? Do they work for an organization, and are their wages reported on W-2s with pay statements? Are they on fixed income? If so, is it going to be sustainable, for at least 3 years? Are they self-employed? And if so, how is that income reported? Is it on a Schedule C of their tax returns, or is it part of a partnership that we want to extract the qualified income from? So we want to get their income in place, talk about their assets, whether it's immediately or if they're looking to purchase a few months down the road, where they plan on assembling the funds for the process. And of course, talk about their credit. You should be self-aware of where your credit is at any point in time, and most people are, especially with the tools these days. But if we feel like their credit is on the fence, where they could have more options than today, if they have some more options tomorrow, what they can do to get their credit in the best position that we can get them in.
I think when you're looking at buying a home, one of the things that can scare people is the down payment, and just wondering, do I have a big enough down payment? Can I afford that? How do you go through that conversation with people, and what options are there if you don't necessarily have the capital for a large down payment when you're getting started?
Down payment doesn't have to come from one single source. It can be accumulated through checking, savings, funds that you anticipate coming in, like a tax refund, a settlement. It can be gift funds from a qualified family member. Wherever the funds can be collated, we just have to document them. And that's just if it's a gift, if it's a disbursement, we just have to document where they came from. So once we have a good feel for the amount of funds and how they can be assembled and how soon, we can look at the different products available. So there are some low down payment products, which a lot of first-time home buyers, is usually one of the bigger challenges they have. They don't have equity coming from another property that they're selling. But they may not have significant savings by being in the workforce for very long. So we would look at products potentially that have lower down payment options. You can get
Go ahead, I'm sorry.
You can get a conventional loan for commonly as little as 5% down and get a very healthy competitive product in the secondary market. It's commonly known from our parents and our grandparents that you might have needed 20 or 30% to get a home in a conventional product. And that's not necessarily the case. You can get a very competitive product for as little as 5% down. Government insured products like FHA have more relaxed guidelines, which is why a lot of first-time home buyers will turn to those products. And you can get funding with as little as 3.5% down on an FHA product. Qualified veterans can exercise their certificate of eligibility if they've served. And with that, they can get 100% financing with no down payment on the purchase of their home. There are some other flexible products. The credit union also has some boutique products or portfolio products that are exclusive to our organization. We even have 100% financing for our members who have superior credit of 720 or stronger. So again, look at how soon the down payment can be assembled, how much they truly feel that they can get, and we can back our way into what choices they have for funding.
I feel like a lot of people that are likely to watch this are maybe first-time home buyers who have even more questions than someone who's been through the process. And one of those questions, because I think it's fair, and I had a lot of these as well coming from renting an apartment, is what are the benefits of home ownership beyond the obvious of having a place you can live and a place to call your own? Financially, when you're looking at that big picture, what do you tell people so that they fully understand, what it's a big commitment, but also what you're getting for it and the value it can provide for your financial future?
Home ownership does bring a level of financial strength. In that what your monthly payment is going to be. You're not going to be subject to increases, from the landlord or the rental company. when you're in a mortgage product, except for any variability in your taxes and insurance, you're pretty much going to know what your monthly payment's going to be. And over the course of time, you'll get that financial stability as, you'll get equity in the home. Hand in hand with an increase in the market value of your house, you're also paying down on your note. So you'll be establishing, somewhat of a financial portfolio by getting the equity out of your house. What is a little less tangible might be that, sense of community, putting down roots, stability, and it doesn't necessarily mean that you have to move into a planned community, like a townhome community or a subdivision. I myself live in a rural community, but I have connections with my neighbors who are, a drive down the road, or get on my four-wheeler and go down and visit them. It's just that, again, the sense of community, the relationships that you'll yield. Annually, you may also feel tax advantages. Taxes become a little more complicated when you become a homeowner. You will at least fill out a Schedule A on your tax returns going forward, where you do get benefits like paying your property taxes and the interest on the first mortgage to maximize your deductions on your personal returns.
What are some of the challenges first-time home buyers will face that may be not as significant for those who are on their second or their third home? Because it can be intimidating. I think for a lot of the reasons we've talked about, it's a lot of things you don't know that you haven't done before. What are some of those challenges, and what tools do you see out there that can help people with that?
The product knowledge, wondering the different mortgage products that are out there, having not had one before or exercised a mortgage. They may not know what their options are. Some just the definitions, the practice of escrowing is, new to a lot of first-time home buyers, where they're actually, paying above and beyond the loan payment each month. They're making a deposit into a savings account that tracks with their mortgage, so that the mortgage provider can disperse the taxes and insurance each year, and they don't have to come out of pocket with that when it's due. Having, property taxes and, the things that come with the home. It is overwhelming. I mean, it's exciting, it's overwhelming. Some of the challenges, as I said earlier, if they're first-time home buyers, they're commonly younger and they haven't been in the workforce as long. They may not have accumulated as much in their savings or 401ks. They may be coming out with student loans and maybe limited in their debt to income ratio. So there are some products that have some more relaxed guidelines, which is why first-time home buyers will commonly turn to FHA. And Federal Housing Administration was created nearly 70 years ago just to stimulate home ownership in America. And it continues to this day to be a means of funding that first-time home buyers will turn to.
It is National Homeowners Month, so that's why we're talking to Catherine Curran here about the process, about buying a home, what goes into it, what are the challenges, how can Georgia Zone help with those? And again, if you have questions of your own, please do drop them in the comments and we'll be happy to address them. There's been a lot of news lately about the housing market. I mean, it's pretty much since the start of the pandemic, mortgages have been in the news for various reasons. Most recently, it's about the rising rates. So can you talk about rising rates and the impact that they have on this process?
Home buyers that are in an active home search right now may experience their compressed capacity for the amount of the home price and the corresponding loan that they'll need to get that home. So constant communication with their loan officer is pretty important, to see where the rates are, hand in hand with the prices of the home, to see that a particular subject property that they're interested in does fit their funding goals. The current rate of inflation is exceeding the rate of income adjustments. It's just the period that we're in. Home prices, property taxes, gasoline, groceries, and services are rising while the federal funding rate is dialed up to help tame this inflation. So it's kind of tough out there right now. But likewise, rental housing is going up every month. So that's motivating a lot of people to buy homes, to get away from, all these increases, including their biggest one each month, which is probably the rental.
You talked a lot about different mortgage products and finding the right product. Can you speak a little more about what that means, I guess, in more layman's terms, when you describe the different products available?
Okay. Well, there's different terms. The most common, especially for first-time home buyers, is probably going out to a 30-year term. Although you can go as in increments of 20, 15, and as short as 10. But most commonly for monthly payment, the loan will be spread out over 30 years. There is no prepayment penalty on any mortgage that I'm aware of at this time. So someone could always pay extra on their mortgage at any time, whether it's monthly, in windfall payments, quarterly, and there's no penalty to do so. If there was, each state does have rules in place to put a cap on it, but I don't think we're back to that situation yet. Products you commonly hear about are going to be the conventional loans, and those are going to be probably with the higher guidelines of stronger credit, a down payment, reserves in the bank, which can be qualified by a 401k or investment account most often. Next to cash, that's a very desirable and attractive product for buyers to offer to buy a home with, because it tends to be lower risk for the buyers to take their house off the market for. FHA's backed by the government, as are the VA loans. So we would work with the Department of HUD in getting the items that we need to qualify the mortgages for those products. And then the credit union has a palette of portfolio products as well. And they're they offer some things like the 100% financing, or some more stable products that you may not find in the market, like our 5/5 arm, which is not as dynamic as some of the adjustable rate mortgages you see on conventional or FHA products otherwise.
And you just mentioned the adjustable rate mortgages. I think that's another term people see a lot, is adjustable rate and then fixed rate. What are some of the differences between those? What are the advantages? What are the disadvantages?
An adjustable rate mortgage is really not that scary. Effectively, it means that the rate going into the loan is secured and fixed for an opening period. The most common ones that we see are the 3/1 or the 5/1, even the 7 or 10/1 arms. How that translates is that the opening rate is fixed for that initial period, 3, 5, 7, or 10 years. And then it could be subject to change annually after that, all the way out to a 30-year term. Up until a couple years ago, it was very consistent that most mortgages were exercised for about 4 years on average. And that means that someone, no matter what mortgage they had, they usually paid on it for about 4 years. It would orbit between 47 to 49 months that borrowers would pay on their mortgage. Because the rates did bottom out during the pandemic and a number of borrowers got some historically low rates, we expect that the active time a mortgage is going to be paid on will probably stretch out to 5 or 6 years. But the reasons for that could be any life events. It could be relocation. It could be an estate situation. It could be a divorce situation. Or some people are just advancing or refinancing their term to get to a shorter term and a lower rate. So for all those reasons, sometimes an adjustable rate mortgage does make sense. And most people look at their plans on a 5-year term. Where are you going to be in 5 years? Where are the kids going to be in 5 years? Are they going to be in school? Are they going to college? These are most things that families will process when they make a big financial decision. So with the rates having the increase that they have this year, we've seen a lot more borrowers go to the ARM products than we have in the past couple of years. But again, no prepayment penalty on any mortgage. So if there was, a change in plans and someone was in their home longer than they thought, they could always look to refinance to a fixed if it was a benefit. The fixed is just that. That means your rate is fixed for the term of the loan. And that could be over 30, 20, 15, or 10. Those are the four fixed rate terms that we'll deliver a mortgage on. And there's no prepayment penalty, very much like an auto loan. Mortgages are simple interest fixed installment loans. So you can pay extra on them at any time to advance the principal and to offset the rate that you're in.
That's another thing that I noticed pretty early on when we got our mortgage was, it's listed on my financial accounts. It's there with the credit cards and checking accounts. And every month you make the auto payment. And you're thinking, well, why is this number not going down? You got this big number, why is the number not going down? And then when you find out more, you understand, because you have to pay off the interest before the principal. So that's another thing I think if you're a first-time home buyer and homeowner that you may not understand is it's not like, okay, well, each month, if I'm making if I'm making a $1,000 payment every month, I shouldn't expect to see $100,000 go to 99, 98, 97.
Right.
It's just another thing I think that people don't expect that's part of this process.
They're simple interest loans, so the interest is heavier up front, and with each payment, the interest goes down and more principal is paid, and then ultimately you're paying more principal than you are interest.
Right.
You can look at any amortization tool online. I've got some ones that I use every day. Excel has a good one actually. In your Excel workbook, there's a really good one there. And, you can see the impact by making those extra payments and, how you can tilt the scales to get to where you're paying more principal each month than interest.
In terms of other expenses that are part of this, homeowners insurance is another important factor. Can you talk a little bit about homeowners insurance and how that kind of factors into everything else we're discussing?
Absolutely. I mean, your home is going to be one of the biggest assets that you're going to own, and the insurance is going to protect that collateral. Whenever you get a loan on a home, you must have homeowners insurance, and then the mortgagee will be the beneficiary of any damage to that home. But in addition to just the dwelling, a full homeowners insurance policy is also going to protect you for liability if anything happens to someone that's visiting on your property. And then there's some coverages underneath the dwelling, which is the largest element of your homeowner's insurance. Usually it's formula driven to protect your personal contents in the home. Commonly personal property is like 75% of your dwelling coverage. And these days, whatever provider you go with doesn't usually require an appraisal. Years ago they did. But now they have their own databases, almost like buying a car in Carfax. All the insurance companies have their own databases now to see if there's any claims on that property or what the area is like, and you can get quotes very swiftly. Most borrowers will start with a company that they have an experience with, commonly their auto insurance provider. When you do get your homeowner's insurance quote, that provider is going to ask that your auto also come with it so that you get both of your assets covered by the same provider. And there's a cost efficiency for that.
Anytime you buy a home, there's also closing costs, right? And that's something else that I had heard that term before. I didn't really know what it meant until we sat down and we actually went through and we did it. So I guess, can you tell us a little bit about closing costs? What should people expect to pay at that stage and what's included in that?
There are expenses associated with any real estate transaction, whether you pay cash or whether you're using a loan. There are expenses associated with it to make it a legal transaction. So in the state of Georgia, the attorney is the closing agent. Most states are title companies to make or to supervise a real estate transaction. Georgia, the Carolinas, and 13 other states are attorney states. So the title companies are in-house to them. Their series of fees will probably be one of the largest sections of the fees for the real estate transaction. So they have to be paid for the work that they do. Altogether, for the transaction, you really have settlement costs. So that is made up of closing costs, which are third-party fees, and prepaids, which are funds that the buyer has to be prepared for. That would include your first year's homeowner's insurance, because you always pay for the insurance for 1 year going forward. It's also the prorated difference or per diem of the property taxes. So the seller will be burdened for their part of the taxes up until the day of closing. And then an escrow amount will be collected to build the account for the taxes and insurance for the buyer. So we'll make a deposit into that account. Other prepaids will include any HOA dues. If you're moving into a community that's managed by an HOA, they may have prorated dues or fees to make it official that you're now a homeowner in that community. And then odd days interest, kind of like prorated rent. So if you close on the 15th or 16th, the attorney will probably collect 15, 16 days of interest for the end of that calendar month. So that's a bucket of prepaid items. And then you have your closing costs, which are really third party. And that'll include loan, appraiser, title company, and government fees. That's where you'd see a lot of variability state to state. Georgia is actually a very cost-efficient state when it comes to real estate transactions. Our neighbors in Florida are much more expensive. Just the state fees alone are more expensive than that. But Georgia is relatively economical. For our members who are purchasing in Georgia, the credit union is based in Georgia. So there is another benefit for our members here at home, in that when we close a mortgage for our members in Georgia, we are exempt from Georgia's intangible tax. And therefore, the attorney doesn't have to pass that on to our members. So that is one cost efficiency by buying a home in Georgia with Georgia's Own. We do fund homes in 41 states. So I see a lot of closing disclosures for kind of our expatriate members. A lot of our members kept their membership, but they've moved to other states. And we'll support their funding goals when they do that. So, I mean, just in this past couple of years, we've seen a lot of people buy in other states with now they have the capacity to work remote. And with the blessings of their employer, they're buying second homes and residences, just outside the state.
What are you seeing now that you mentioned that? What are you seeing in the Georgia home buying market relative to what we're seeing nationally? Is it pretty much the same, or things different in Georgia? How have you seen that sort of evolve here recently?
I think in every zip code, we're seeing that home prices have gone up. My son is out of state. He's in Fort Carson. He's stationed up there. I've seen the prices of Colorado. They're very proud. I have family out of state in other states. Same thing. Overall, I think Georgia, you still get a lot of house for the housing dollar here. But likewise, we've gone up proportionally, in the cost and the value of homes. It's good for those of us who are in a home. It's good. It's a good feeling to know that we have that equity, based upon the sales activity in our area, but that can change. Value is determined by what someone's going to deem as, an appropriate price to pay for something. So, we have seen a lot of new construction in the past couple of years, which has been refreshing. That's not a term that we heard for quite a long time. When the market was heavy in inventory, there was no need for new construction to proceed. And now there's been, a lot of catch up. We see a lot of new communities coming up, a lot of builders, coming into the state that weren't here before. So we've helped our members with a lot of new construction loans. We have quite a few in our pipeline right now.
When it comes to new construction, are there special loans specifically for those types of purchases?
New construction homes that are with a builder and you get a contract for a specific property in one of their communities isn't much different than getting a purchase agreement for an existing property. Usually they take a little bit longer. Sometimes there's more amendments because the cost of materials. We work with sales agents from the builder more than we do realtors. If you're talking about a new construction loan for a property that an individual wants to build with their own builder on their own land, that is a different product. And we do offer those at the credit union. So most commonly in those circumstances, the member already has the property. Maybe they got it from a family agreement from land that's been in the family for a while, or they bought it a few years ago and they've just been sitting on it until it was a good time to build the home that they want. But that would be a true construction loan. And we do offer those. They are for 12-month terms, and they have 5 draw periods during that time so that you get to each phase of the construction. Sometimes it starts with the demolition. Sometimes it starts directly with the foundation. But we work with the builder and the builder's agreement, their design, the specs, the plans, and we work with our members to get the construction loan that'll transition to the permanent mortgage.
We've covered a lot of ground. I know a lot of different topics, and for a number of these, they're terms people aren't super familiar with. So there's a lot, I know. Is there anything we haven't covered that you think is really important or strikes you as something else that needs to be included in the verbal manual we are providing here today?
Don't be scared about mortgages. It is a process, and that's what we're here for. Home buying is a process, and get your team, get your lender, someone that you feel comfortable with. We hope it's with us. The credit union's goal is to maximize our members' dollars, and we're available to provide guidance, whether you're thinking about doing something in this summer or in the next year or so. Whatever we can do to help position you for the best funding experience, because home buying is a colossal deal, especially when you're selling a home and buying a home. There's a lot going on. So we want to make the funding part as easy and as pleasant as we can. And if you have an opportunity to position yourself for the best options, I'm happy to provide guidance for that, whether it's credit or reserves or savings. Again, we want to put you in the best product for the long term that we can. And that's what the professionals are for, not just the loan originators. That's why you have realtors. That's why you have appraisers. That's why you have real estate attorneys and title agents. It's at the end of the day to protect the buyer, and it's all for their long-term benefit.
Before we go, any final tools that you would recommend for people? So if I've just watched this whole session and now I'm ready to take this step and I want to start having these conversations, where do I go online? Who do I call? What would be the best route forward if I'm in that mindset? Absolutely.
On our website, you can go directly to apply for a mortgage. You can start out with a quote, just enter your personal circumstances, start out with a purchase price that maybe supports a home in an area that you're fond of. And then you can go forward with a full application from there, or contact myself or one of my team members. Again, ask us the questions, tell us your circumstances and your funding goals. And, we can tell you exactly where you need to be and how soon.
Mm-hmm. And again, if you've watched this and you have questions you want to ask directly and get answers from Georgia Zone, you can do that. Just comment below. Again, doesn't matter when you're watching this video after the fact, someone from the Georgia Zone social team will get back to you and make sure that you have the information you need and the resources that you need to help take this very important step in your life and in your family's life as well. Catherine, thank you so much for your time, for all this information. And we hope you get to talk to a lot more people telling their stories, and Georgia Zone's helping to move into their home of their own.
Delighted. Thank you very much.